As we record this in late December 2025, silver prices in the United States are trading near historic highs, with spot silver recently reaching roughly $68 to $69 per ounce, according to major market reports. This price level is extraordinary. For decades, silver often traded far lower, with multi-year averages settling in the $20 to $30 per ounce range just a few years ago. Prices have surged over 130% year-to-date, driven by a unique combination of economic, industrial, and structural shifts. Silver's upside this year has outpaced gold in percentage terms, reflecting not just investment sentiment, but fundamental demand growth. Analysts suggest continued price momentum is likely into early 2026, with several forecasts projecting average prices between $56 and $65 per ounce next year, under typical industrial demand scenarios. These price levels provide a baseline for understanding how industrial demand may influence silver's trajectory. Silver has a dual identity. It functions as both an investment asset and an industrial metal with broad applications. While investor interest drives speculative movements, industrial demand grows alongside technological and manufacturing expansion. Solar energy, electric vehicles, electronics, and infrastructure development are now central to silver consumption. A single solar panel can contain 15 to 20 grams of silver, and as renewable energy installations expand, silver demand for solar could become one of the largest industrial drivers in the coming years. This is not a niche trend. Utility-scale solar farms and rooftop installations directly translate into sustained silver consumption. Electric vehicles also consume significant silver. Modern EVs require silver in electrical circuits for battery systems, high-performance connectors, and power electronics that manage energy efficiently. Silver is also embedded in EV charging stations and grid interfaces. As EV production scales, so does the silver demand embedded in each vehicle and its supporting infrastructure. The electronics and technology sector is another major consumer. Silver's electrical and thermal properties make it essential in capacitors, conductive adhesives, semiconductor packaging, high-speed signal networks, IoT devices, 5G equipment, and AI data centers. Electronics alone historically consume hundreds of millions of ounces of silver annually, and with global electronics markets expanding alongside U.S. technological infrastructure, this segment is likely to remain a steady and growing pillar of silver demand. Other industrial uses include medical and healthcare applications, such as antimicrobial coatings, chemical catalysts used in manufacturing, and advanced metal joining in aerospace and industrial machinery. While smaller in scale than solar or electronics, these applications diversify industrial demand and add resilience to overall consumption. Industrial demand has been growing consistently over the years. According to authoritative industry reporting, industrial silver demand reached a record of over 680 million ounces in 2024, marking consistent annual growth. Electronics and photovoltaic sectors account for a large share of this total, and research indicates that growth is expected to continue into 2026. Unlike short-term speculative investment, industrial demand reflects structural trends linked to energy, technology, and infrastructure, making it a reliable factor influencing prices. Industrial demand impacts silver prices by removing physical supply from the market. Silver mining output is largely tied to base metal production, meaning supply cannot quickly increase in response to rising prices. When silver is embedded in industrial products, much of it becomes unavailable for immediate resale, creating a structural deficit. Persistent deficits, when industrial and investment demand exceed mined supply and recycling volumes, exert upward pressure on prices. Analysts expect these deficits to continue, particularly driven by technology and renewable energy sectors. Renewable energy, particularly solar, is one of the fastest-growing sources of silver demand. U.S. solar installations are expanding rapidly, supported by tax incentives, corporate and utility commitments, and falling installation costs. Silver demand from solar could constitute a growing portion of annual consumption by 2026. Unlike some industrial uses, solar demand is predictable, long-term, and directly linked to energy policy and infrastructure spending. This replaces declining sectors like photography, which historically consumed significant silver. Looking ahead to 2026, research projections indicate that silver prices may remain above historical averages due to sustained demand and structural market dynamics. Industrial demand is expected to remain a central driver of global consumption, with average price targets ranging from the mid-40s to mid-60s per ounce under typical growth scenarios. Several trends support continued industrial growth. Electric grids and renewable integration require more solar capacity. Automotive electrification accelerates EV production. Data centers and AI infrastructure continue expanding, and 5G and IoT deployment persist across urban and rural areas. These factors collectively create a multi-sector foundation for silver demand that is more resilient than investment flows alone. Silver's trading near historic highs in late 2025 reflects both investor interest and real industrial demand. The ongoing structural growth in solar, electrification, electronics, and infrastructure continues to absorb silver at record levels, reinforcing forecasts that project strong prices into 2026. Rising industrial demand, combined with supply constraints, creates persistent upward pressure, suggesting that 2026 could see silver maintain higher than average trading levels as consumption continues across multiple high-growth sectors. As we move deeper into the discussion of silver's outlook and its industrial demand into 2026, it is essential to ground our perspective in the latest market developments and structural trends shaping this metal's economic path. Silver has been experiencing an exceptional rally, driven not only by broader market forces but by deep shifts in how the global economy uses the metal. In late 2025, silver surged toward new multi-year highs near $69 per ounce in U.S. markets, a performance far above its long-term average and reflective of unprecedented demand patterns. This rally reflects more than investor interest. It signals a transformation in silver's role within high-growth industries. Industrial demand now accounts for a majority portion of global silver consumption, with recent industry research showing a record 680.5 million ounces used for industrial purposes in 2024, up again from prior years. This marked the fourth consecutive year of rising industrial uptake and highlights structural momentum rather than temporary spikes. That growth was fueled by sectors such as electronics, green energy, and automotive electrification, directions that are expected to remain central in 2026 and beyond. Looking ahead to 2026, multiple independent analyses suggest that industrial drivers will continue to shape silver markets more powerfully than at almost any point in recent history. One of the most significant thrusts for this demand growth comes from renewable energy, particularly solar photovoltaics. Silver's exceptional electrical conductivity makes it a core material in photovoltaic cells, where it enables efficient electron transport. Solar panel manufacturing thus directly consumes silver, and with global commitments to expand renewable energy capacity accelerating year by year, this demand source is projected to increase materially. Market forecasts indicate that solar installations could consume between 220 and 232 million ounces of silver annually by 2026, purely from the photovoltaic sector. This represents a structural shift away from traditional uses and toward clean energy infrastructure demands. A parallel growth engine for industrial demand is the electrification of transportation through electric vehicles and the supporting charging infrastructure. Electric vehicles require significantly more silver than conventional internal combustion vehicles, particularly within battery management systems, power electronics, and electrical contacts. Reports estimate that EVs use 67–79% more silver than traditional vehicle types, with each vehicle potentially incorporating 25 to 50 grams of silver, depending on design and technology. As the U.S. continues to increase production and adoption of EVs, and as charging networks expand across cities and highways, silver demand tied to this sector is expected to expand at a strong compound annual rate through 2026 and into the next decade. Technology infrastructure beyond transportation is another unrelenting source of silver use. Silver's unique combination of electrical and thermal conductivity makes it indispensable in a wide range of electronics, from semiconductors and printed circuit boards to advanced data centers supporting artificial intelligence workloads. The expansion of 5G networks and the rapid growth of data center capacity, especially in the United States, continue to bolster demand for silver-intensive components. Reports show that digital infrastructure's power capacity has grown exponentially and, by extension, increases the need for associated hardware that relies on silver's conductivity. As artificial intelligence, machine learning, and edge computing continue to expand, the material footprint of silver in these technologies will not diminish. If anything, it will grow as new applications emerge. Industrial demand alone, however, does not fully explain why silver is poised for a structurally elevated 2026 relative to past decades. Equally important is the supply side of the market. Silver production is largely a byproduct of mining other base metals like copper, lead, and zinc, meaning that primary silver mining activity responds slowly, if at all, to changes in price or demand. In fact, this structural constraint has been tightening the market for years, with annual deficits reported repeatedly as global silver consumption outpaces mined and recycled supply. Analysts note that supply growth through 2026 is likely to be modest at best, with little scope for rapid expansion even if prices remain elevated. This persistent supply deficit means that industrial demand, which increasingly absorbs most of the metal produced each year, will occupy a magnified influence on pricing dynamics. As industrial sectors grow, they physically remove silver from the market, reducing availability for other uses and placing upward pressure on prices. With supply relatively inelastic and demand expanding, even incremental increases in industrial consumption can translate into disproportionate impacts on prices and market tightness. Macro conditions also play a role in the context of 2026. A backdrop of potential interest rate shifts, currency fluctuations, and broader economic uncertainty affects commodity markets generally. While silver's industrial narrative is central to this outlook, monetary conditions that influence investment demand can amplify market moves. For example, expectations of looser monetary policy in the U.S. can weaken the dollar, making dollar-priced commodities like silver more attractive in a global context. Although this script focuses on industrial drivers, macroeconomic shifts can reinforce price trends initiated by physical demand fundamentals. Taken together, these forces suggest that 2026 will not simply be a continuation of recent silver market behavior, but a year in which structural industrial demand fundamentally reshapes the price landscape. Expert forecasts vary in their specific price targets. Some estimate silver could average in higher ranges around $70 to $90 per ounce, if industrial demand remains strong and supply constraints persist. These projections contrast with more conservative scenarios that take into account variable economic conditions, but still imply elevated prices relative to long-term historical averages. Regardless of exact price outcomes, the underlying message remains consistent. Industrial use, rather than short-term speculation, will be the dominant force driving demand. For businesses and industries looking at silver in 2026, these trends create both challenges and opportunities. Manufacturers in solar, automotive, and technology sectors will need to anticipate potentially higher input costs and consider strategies to manage material procurement. Investment planners will need to assess how industrial demand intersects with other market forces when modeling price risk and long-term asset allocation. Commodity strategists specifically cite silver's constrained supply and expanding industrial absorption as key reasons to expect ongoing price support, even as markets adjust to broader economic cycles. In the United States, policy developments also underscore this industrial narrative. Silver's inclusion on the U.S. critical minerals list underscores its strategic importance to energy, defense, and technology sectors, reinforcing industrial demand expectations. Government support for clean energy deployment, EV infrastructure incentives, and technology manufacturing all contribute to incremental silver use over the next year. This policy context situates silver not merely as a commodity to be priced in financial markets, but as an essential material in national industrial planning. On the whole, the evidence points toward a 2026 in which silver's industrial value becomes even more central to market dynamics. With robust demand from clean energy, transportation electrification, technological infrastructure, and constrained supply growth, silver stands poised not only for continued elevated prices, but for a market environment shaped by long-term structural fundamentals. For anyone examining silver markets through an industrial lens, the coming year represents a pivotal moment in understanding how materials underpin modern economic growth and technological transformation.